Alright, welcome back. It's going to be swing trading part 2. In the last video we talked about simple swing trading. Okay, in this one we're going to take our swing and place it in various contexts, meaning what causes the swing. So we're going to look at a couple different contexts to put our swing into, and then study the same basic swing components we were studying. So swing trading is pretty simple on the face of it. You get a nice impulse, price pulls back, you let them build some sellers or buyers if you're going the other way, and then you swap those guys and you try to capture the swing as it's turning back up or down. The fact that we have an impulse and price is going up in the first place, it's telling us one thing: the flow is up, and then we're trying to hop on it as price pulls back. Now keep in mind, this is simple swing trading, that's the essence of it, but there's no way to tie everything up into a nice neat little ball that's going to look exactly the same every time and it's going to work every time. But what we can do is try to get things as simple and objective as possible. Swing trading is one of many methods of trading, and we'll talk about other methods of trading here in the future. And also these videos, they build on each other. So for instance, you're going to want to have watched mapping any market, any time frame with swings, and then I did a video on price action on the pivot components, the components of this pivot that can help us with confirmations as to when price is turning. And there's a video on left and right side entry. So be sure to check out all the videos. I try to repeat a little bit as we go, but they all work together and build on each other. And we'll see if we can find something to plan a swing out here on one of the bigger time frames. Alright, so let's take our swing and place it in various contexts, and we'll also look on the short side. We'll get some time. We got to see what this looks like on the short side. So we'll come back to this. Let's come to something that was being talked about by one of our members. Alright, so if we took our swing, what we studied last time was a nice impulse. Price slowed down into some minors, busted those minors, nice scary drop, and then built some sellers, let them build it in some way, and then zoomed those sellers. So this is basically what we covered last time, and one of our members made some nice little rules for this. Whoops. Let's zap the bars for a minute. So we're looking at a swing. Step one, you get a nice impulse. It makes sense, right? Price is moving upwards, and then you get the minor swings. That's what the gap slide is representing here. And then you get the scary drop, scary move, and then you get the let them build it. You want the sellers to build it because you want to think about hopping on to this swing. You want to build some room for a trade. And then choose your poison for entry. So we have several entry techniques. I'm just briefly going to speak about them. In the last foundations video I said, nail your entry technique down and know your stop and know your trade management. So various entry techniques. So briefly, when price is here, you can just put a buy stop and buy stop your way into this zone. Let the market take you in. Put a stop underneath. One option. You can go 50% of the zoom. Or you can just do the average zoom retest. No entry is perfect. They all have some give and take. but that's briefly your entry options. All right, so now let's take this swing and put it in context. We'll come over here. See, I got some room over here. Zoom. Okay, so what I've done is I've labeled out a context for this swing, and we're going to call this first pullback, after breakout. Okay, this actually is my favorite way to trade swings currently, because this is a momentum, and what you get is you get all this pressure build up. Now we're just putting a context behind what's going to provide the impulse, and we're going to cover two today. All right, that's one. First pullback, meaning zoom, you get this momentum, they chase, some miners, they drop it back, and that momentum, we're looking for it to carry on. And in this chart, we can see that right here. See, we get this coil, and it's beautiful because you don't have to do anything. You do have to wait. That's about it. Then look at the nice drive out of it. So you can see they're driving out of this thing. This is where your breakout methods come in, and there's nothing wrong. We'll actually talk about breakout methods at some point. I mean, if you look, everything price-based method is in here. You have range methods, boom, 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 boom. You have breakout methods, which can work with a trade management for it. And then what happens after breakout? You pull back. Swing method. So here we have nice impulse, step one, and what I'm calling the gap slide. It, basically price builds some kind of a shelf. It breaks off, builds some kind of a shelf. You get the scary move, see them? You wait for it to build some kind of sellers, and then you look at the size of this bar here. See how it's bigger than one? It's engulfing everything. This is your zoom. This is your swap. Now it's just a matter of choose your poison for entry. I just covered 3 basic entry techniques. One is you can be right here, throw your orders in the market to take you in. 2, you can go about 50% of the gap, take you in. 3, wait for a zoom retest. None of these is perfect or will work every time. They each have a give and take. You get a worse position, bigger stop, and the stop's going to go into the pivot. All right, before we get into details of trade, let's look at the next context. All right, so we get this. It's just a swing. This is our model here, but the swing is being provided by the breakout. All right, so our next model and it's actually right in here. So we can use this for both models, and then we'll check some things out. The next model is going to be just using a balanced reaction leg, and then when we get into that neighborhood, which will be like right around here, you just you follow these same steps. Step 1, impulse. Step 2, you crack these minors. Step 3, you get this scary move, usually because the momentum guys are being chased out. Then you let them build it. And then swap it, and then choose your entry technique. So these are your two contexts. Balanced reaction leg, first pullback after a breakout. Now there's other contexts, but what we're doing is we're just taking our simple swing and understanding it in various contexts here. So here, the market continuing and swinging is providing the impulse. Here, breaking out of a coil or range of consolidation is providing the impulse. Now that you can make this distinction, you can study these. And this one is actually in here too. Okay, if you did your mapping of markets, what do? You come in here and you say, oh, I got a swing, I got a swing, oh, I stopped swinging, right? See, I'm doing this, I'm doing this, I'm doing this, and all of a sudden you ain't doing that no more. So again, refer to previous videos. So this will become our last swing broke. Okay, that's our last swing broke. And whenever price pulls back, so it's a bit relaxing because, hey, you don't have to worry while it's screaming up. You're waiting for it to pull back. If it never pulls back, nothing happens. That's fine. You can't be everywhere. If it does pull back, you can then measure the swing. As you get into this neighborhood, give or take a third of this, you wait for it to swap. Build some sellers. And believe me, if it swaps, you don't want to, please move swap. You want to, boom, swap. Okay, so those are your two contexts. Now, let's go look at them in some other instruments and time frames. So I'm just going to take two recent trades this week. And, by the way, don't expect everything to work perfectly all the time. If you're a trader, you're going to be wrong a lot. Just expect to be wrong a lot. There's going to be plenty of times. You're never going to know for sure that this isn't going to go. You're never going to know this. All right? What we can do is learn as much about our method as possible. But you're going to have a lot of trades that don't work out. But let's go look at this in gold. So notice, gold, boring, 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 boring. I leave it alone. I don't do anything. I'm not predicting. I don't care. Show me something interesting. Boom. Interesting. Okay, so as price is doing this, I'm thinking about first pullback. So now, of course, it might just run all the way to wherever it's going to go, and that's all it's going to give you. This one's actually kind of a high first pullback. But you get a first pullback. Think about it. First pullback out of a breakout. As it pulls back, you're following the sellers. You're following the basic steps. The more you understand about price action, the better off you are. Price starts to come out of this thing. They're building sellers for you, and they're zooming sellers. See? Price swaps. Now it's a matter of entry technique, which can be half the zoom, buy stop your way in, so on and so forth. So in this particular example, and then you still have trade management. In this particular example, I'm just taking our swing and placing it in a context. And if I look at the Russell 2-minute from Thursday, now I'm going to look at the balanced swing context. So we're just taking the swing we learned in the first video. Now, I can't cover all the nuances here in 15 minutes. And we're placing it in context. Okay? And we're saying in this case, I know how to map swings, like so. And this is what median lines do, by the way. A to B, measure that leg from C. Now, as price pulls back into that neighborhood, don't have to be exact, as price pulls back into that neighborhood, I am following, I'm following these little swings. I'm following sellers. I'm following these sellers, these tails. See, this is price act. This tail's reaching into this tail and it's turning down. I'm not predicting. I'm going to let the market take me in. It's still going down. Zoom. See the size of this bar? Bigger than everything else in here, starting to. So now I have an option to enter this market. And basically, I'm going to put stops under the pivot. Now, I know you cheap stop guys, it's not going to work for you. But if you look, that's probably a problem with a lot of your trading is cheap stops. Cheap stops is fine if you're working the breakout. But even then, you can't cheap it out too much. And so that's a way of capturing a balanced swing. So quickly, let's see what this pattern, this simple swing pattern, might look like on the short side. Okay? So here's the Aussie. And one of the ways you can key into this is look for the impulse. All right? Look for the impulse. Look for the gap on the left. Look for the impulse. And so what happens is you get this impulse. And then price gets squishy. Right? Because they're pushing it. And then price pops out of this and starts to get people enticed up, people who are short are coming out, and then zoom. So our short swing model, impulse, squeeze them down, pop, build some buyers someplace, zoom them, and run. So I realize for a lot of people, and you can see the zoom here, okay? I realize for a lot of people it's harder to see on the short side. Let me just take this chart. I'm going to flip it for you so you can see what it looks like inverted. There. This is the same exact chart, same exact drawings. Look at the pretty impulse. This is actually working its way as a nice first pullback breakout kind of a trade. Okay? So this is that same chart just inverted. It pulls back. We have sellers, we have sellers, we have sellers. Zoom. Look at that bar. It's beautiful, right? You know, as you're reading price action, you can see the gap down and the gap up, the gap swap, and then choose your poison. All right. So we got a little bit of time left. I don't want to make these too long and bore you to death. But let's look and see what this Aussie looks like on a daily. And if you're just looking at this market and you're mapping it out, you just look for your major swing, right? So, and let's get curious. The reaction leg is about yay big. Reaction leg's about yay big. All right. So there's a possibility for balanced swing context in here. Let's let the market help us decide. So we have this impulse which is created by the new swing. Price coming down kind of dirty, but we get a nice little scary here. And ideally it'd be nice if we broke that ahead of time. But let's look. They turned them up. They ran into some sellers. So let's practice at least our planning with this kind of a thing. Okay, so we're at to let them build it. Now if we get a nice swap, we want to get a nice swap, what we'll do is we will pick our entry poison, maybe zoom retest halfway down the swap. Stop will go underneath. Hey, stop will go underneath by a little ways, and we'll look to capture a full swing. All right, now if you watched the last video, think about what your particular trade management will be on this, what your entry will be on this, and you're in the planning phase. You can know pretty much everything ahead of time at this point, and then just let the market take you in. All right, so we'll see how this guy ends up. If we never get a proper zoom, then we reset. So just as a recap, what we looked at was context of our swing, either in first pullback breakout or a balanced swing context. Basically, what is producing the impulse. All right, so we packed a lot into this one, and see you next time.